Hello everyone. I want to give a top-down analysis for the reason why I take some trades and the reason why I don't take some trades. So the first reason why I take any trade is I look for liquidities. Liquidities run the market. So that is something you should put in back of your mind. Liquidity runs the market. Before taking any setup, there should be a liquidity, or else you will be the liquidity. So I spot liquidity. When I find the liquidity, I wait for liquidity to be taken out. Then I can look for a buy or sell position. Then I will take my trade. So then, what is liquidity? Liquidity moves the market. Liquidity is where many buyers is or where many sellers is, where the market can sweep out to push out the opposing force and go in the direction it wants to go. Let's say, for example, the market wants to buy and there is a threshold in the market that is holding the market behind. The market will tend to pull back to the opposite side of the buy, which is to sell, and take out the liquidities under. And that will give the market the free way to buy above that threshold. So liquidity moves the market. So now, there are many kinds of liquidity. I use a lot of liquidity, a lot. So I'll be sharing few of the liquidities I use and how I use them. So here is it. I'll list them out, talk about just one or two, then show a short example, and that is it for today. So let's go. Okay, so this is the first type of liquidity I find out in the market, and if you notice, I write mostly on the higher time frames, like the 1 hour time frames, the 4 hour time frames. So these are mostly time frames where I look for the long week liquidity. So in case the word seems strange to you, so let me give you an example of how the long week liquidity looks like. So let's say this is it. Then okay, like this. Then you add color to it. So you have a color to it. Okay. Okay, this is an example of how the long week liquidity is. Okay, you can also call it imbalance, because this is clearly an imbalance in the market where there is a space before the close of the candlestick. So this whole space, these are liquidity. These are liquidity. So, and you don't know exactly when the market will come and fill this imbalance and take out the liquidity, which is this, the low here. This is the liquidity here. So I'll make it EX, a factor that we'll have to take out. So this is the liquidity. But under this liquidity, there is also an imbalance. So most cases I've seen in the market, maybe not right away, but the market would normally reverse and close and take out the liquidity first, then close in between the imbalance. Okay, let me give you an example of what I mean. Market will do something like this. Maybe the market starts here. Okay. Maybe the market will do something like this. Okay. Like this. Then you will see something like this. Okay. This is okay. Okay, you will see something like this. The liquidity is being taken out and this imbalance has already been filled. Not completely filled, because you cannot expect the perfect completely filled in this case. This is a market, not where everything is always right. So this is just a clear example of how the system works. So if I open my higher time frames, let's go with let's say 1 hour time frame, for example, no, 4 hour time frame, and I see an imbalance like this, which I also consider a liquidity at the tip of the low or the high, regardless of the case it might appear. So I'll wait for the market to sweep out this liquidity point before attempting a buyout. So this is what I will expect from the market: to sweep here, then close first, then maybe retest this zone again before continuing the buy. So this is what I will look for in the market. Remember, a sweep first, then close above it. To close above it, very important, to close above it. Then if the market were to continue the trend down to the upside, the market will have to come back and retest this zone. If it's strong enough, it will push the market up, but if it's not strong enough, the market will continue selling. So that brings us to other factors of where to know how to take the zone for the buy, or to continue the sell trend here. So that is not the class for now. Today we are talking about only liquidities. So this is an example of how I use the long wick liquidity. It does work most times. Most of the times it does work, yes. So I use it very often, especially when I spot it on the 4 hour and the daily time frame. I use it. I wait liquidity to be swept, the market to close above the liquidity, or above the low that created the liquidity, or above the high, depending on the buy scenario or a sell scenario. This is a sell scenario, for example. So there's no time to go for a buy scenario, but let me see if I can just give you the buy scenario. It's just the opposite. So let's bring out the buy scenario here. Okay, I'm using blue for the buy. Let's go. Scenario. Blue. Then okay. Okay. This is an example of the buy scenario. This is the liquidity. Market will sweep out the liquidity. Then if the next candle were to form, I will expect a push to retest this zone. Then if the zone is strong enough, it will continue selling off. But how to know if this zone is strong enough? We have to do it in another class. So like I said, this is just about liquidity and how to use the liquidity in the market for your own advantage. But remember, I said I only use this on the higher time frame, the daily time frame and the 4 hour time frame. These are my two higher time frames which I look at for trend in the market. So don't pick this to a other time frames without, let's say, the lower time frame, without any back testing first. So this is it. So for now, let's go to the second liquidity we have here. Let me put this up. Okay, a fresh SNRO liquidity, and it is used for trend continuation. A scenario whereby you are on a buy setup, and you want to know if this market is still on a is still going to be bullish or bearish. For example, if you are taking a sell for bearish, or if you are taking a buy for a bullish. So you want to know if the market is still continuing in your direction. So this is how I use the fresh scenario as liquidity to continue my trend, and also to add more positions if I choose to. So here is it. This is an example of an scenario, how an scenario looks like. And let me explain how it looks like. An scenario is a space between two bullish candle or a bearish candle. Remember, it's not a bullish and a bearish candle. It must be two bullish or two bearish. So the space between them, for example, you can look at the space between these two candles is an scenario. The space between these two candles is an scenario. This space between here is an scenario. Space between here is an scenario. And if you notice a trend in the market, you find the scenario, which one is the fresh scenario and which one is the unfresh scenario. At this point, this is a fresh scenario. This is a fresh scenario, and this is a fresh scenario. Why is it fresh scenario? Because the market has not yet come and tap in that point to continue the trend. So it's a fresh scenario. So for example, where let's say I'm in a sell scenario here, and the market is ranging here, here, and here like this, then suddenly the market is coming to a bullish form. Let's say it gets in here. Let's say the market does something like this. Okay. Let's say the market does something like this. Now, this scenario has become unfresh because the market has gone and tapped in that zone of scenario and closed below it. So if I see a scenario like this, and I'm on a sell in this market, I will not rush and close, because first of all, I will know that this market only came here to tap this scenario and close below it. Remember, close below it. If the market close above it, this scenario is still fresh. But if the market close below it with a body wick, the market tap on it, the scenario level with a body with a wick of a candle, that becomes unfresh scenario. So this liquidity here has been taken out. So the market will continue its trend down to the this is a bullish side, so should not get confused. This is a bullish. Okay, in this scenario here, this confirms that this scenario has been taken out. This liquidity here has been swept, and the market can now continue the sell down. Market can now continue the sell down here, like this, to continue the trend. So in a scenario whereby you are afraid if the market is retracing back to your entry level, so you should not be afraid, as long as this scenario was taken out and there's a close below it, below the level, you can also keep your trade, your sell trade going. But if you are afraid maybe the market will reverse to your entry level, you can close or maybe break even. So that is it. But for me, I use it as to confirm if the market is still continuing the sell or not. Will the market buy from here down to my entry level or not? And sometimes, most times, I also use it to add more position at this level, because I know after this rejection, there is a full candle going down to the trend. So that's why I said I use it for trend continuation for the scenario. So these are the type of liquidity we are going to treat for now. The long week liquidity and the fresh scenario liquidity for trend continuation. So this is it for today. There are more. There are about 6 liquidity form I use to spot entries, continuations, and to leave the market, to exit the market, even when my TP is not yet reached. So I'll give you an example of the long week liquidity and the fresh scenario liquidity on the chart. So let's go and look for the chart. Okay, let's head to, this is a 1 hour time frame. Okay, let's head to it. 1 hour time frame. I think I spotted one last time. Okay, I find a clear example of what I mean by the long week liquidity on BTC on 4 hour time frame. This is it. So like I said, this whole point is an this whole point is an imbalance and also a liquidity. And if you look at it in this place, look at it exactly how it should be. Like I said, the market will not fully close the whole week of the candle. Let me remove this here to stop. The market will not fully close the whole week of the candle. As you can see, the market, after creating this imbalance and liquidity, which is the long week liquidity here, the market rallied down there and went up, comes down again and went up until it covered a significant amount of the week. Then it took out the liquidity above it, then continue the sell. So in a scenario like this, like I said, there are other confirmations, but in a scenario like this, you place your entry here at this point and you run down a sell down to this place. This is a clearly 1:5. It's an example of how the long week liquidity works. So I will give one example for each and I will close up for today. So let's find a fresh scenario for trend continuation. So in this fresh scenario for trend continuation, I normally use it for on the lower time frames. Let's say the 5 minutes time frame, 15, and the 1 hour time frame, because these are these bring more details about the market than the higher time frame. My higher time frame only show the overall trends of the market, but the lower time frame give you more details of the market. So let's go down to the 1 hour first. Okay, 1 hour. Okay, this is an example of a fresh scenario for a continuation for, like I said, I normally find the fresh scenario on the lower time frame, like 15 minutes. So this is BTC 15 minutes time frame. Let's take this trend for example. Let's over this trend for example. This is a trend here, and for let's say we took a buy here at this point and we got a first bullish candle, second bullish candle, and let me remove this. At this point, there's an scenario level here. Also, there's an scenario level here. And here also there's an scenario level here. Okay. Let me remove this. This one is a bit close. So it's a bit close. So in this place, you can see how this market move. You want to close this market. If the market moves in this kind of form, you will be afraid to close this market. Let's not put any entry. Let's just follow at this trend in the market. So there is a first bullish candle here and there's a second bullish candle, and this candle went all the way here, all the way up here, all the way up here. You can also use this one as a long week liquidity set, but I don't normally use it on the lower time frame because they don't give me more assurance than the higher time frames. So I mostly go for the higher time frames long week liquidity. But you can see an example of long week liquidity here, where the market rally here and closed a significant amount of the week, then took out the liquidity there and fallbacks So this is an example of also a long week liquidity on the 15 minutes time frame of BTC. But here we are on the, but we are going to the SNRO, fresh SNRO level here. So if you look at this trend here, the market rally all the way up down here, and you see how the market retraces down to this place. You will be afraid if the market will still continue the sell the buy or not. So, but in this case, the market formed at this second bullish candle and took out the SNRO level here and closed above the level. You see, the market closed above the level. So if for instance, before these two candles were created, the market has only done this pullback here, you want to close the market because this is a clearly sign of there is a reversal there. But when the market does something like this and close like this, you see it took out the SNRO and closed above it. If you go to the lower time frame, let's the 5 minutes time frame now, you see that there's a rejection at this level here. But let's stick to the 15 minutes time frame. You see the rejection above this level and it closes, and you still expect the buy to continue once more. But in this case, there is a long week liquidity here which the markets respected and retraced back to the sell point. So let me see if I can get a other example of this SNRO level. Let's see, let's look for one more. Okay, found one. Okay, this is a lot of SNRO here. Okay, this is a lot. Here is one. Here is two. And here is three. SNRO. So in this buy continuation here, you see the market created the first SNRO fresh, second SNRO still fresh, and if in this third candle here, the wick of the candle came down all the way here and sweep out both SNRO 1, 2, sweep out both SNRO and close this above it. So in a scenario whereby we are on a buy setup here, let's say we are buying down all the way up or buying all the way up there, and you see the first candle, there's a rejection wick. You are afraid if the market you are already doubting yourself already that if the market is continuing, if the market will keep buying or not, because see the first candle a rejection, second candle rejection, third candle rejection. So, and I'm seeing a big because first of all, before the market closes bullish here, it came all the way down here as a bearish candle and took out the first SNRO, second SNRO, and closes above them. And look what happened in the market later on. The buy continues all the way up here. So you can also use this fresh SNRO for market, for trend continuation, for you to be assured that this market is going to my direction. This is it for today. I'll close with this.